This is the perfect time to try and figure out what your customers are thinking. You have $1.3 trillion in assets under management.
Yeah.
You've got about 12 million customers. And what you see is pretty reflective of what's coming. What's
I think, the idea of, are we really 1999 again? And we're really looking at a dot-com bubble. These are two different worlds from there. And you remember in the 90s, we just kept going up like this. Then there was a pretty significant recession for the next 3 years. After having gotten beat up as badly as our clients did in the last quarter, they're very wary of that. That was just yesterday for them. So you can see them like month to month starting to get back into the markets. They are net buyers today. And the sentiment that we've received from them is that when they look at the marketplace, they feel pretty good about the U.S. economy. They feel pretty good about where interest rates are. But they're a little bit nervous about the fact that we have a president that could tweet a problem almost any time he would want to, worried a little bit about the global slowdown from an economic perspective. So the clients are cautious but optimistic.
What does that mean in terms of cash that may be sitting on the sidelines? Is there a pile of cash still out there?
There's still a pile of cash, but it's coming into the marketplace.
Yeah.
So they've been net buyers now for the last couple of months. In fact, from a net buyer's perspective, a couple of stocks that they really buy, Tesla, which wouldn't be a surprise to anybody, but Aurora Cannabis is also one of them, which I was a little bit, which I was surprised at. Was a little surprised at. And then you look at some of the things that they've sold, and they've actually recently been net sellers of Apple and Amazon. But
really?
Over time, they are certainly net buyers of Apple and Amazon.
What do they think of the IPOs that are out there? What's their tendency?
The typical retail investor, when they think about that, normally they want to get involved because there's an awful lot of attention being brought to it by the media. But the reality is that, and it's our job to protect our retail investors, but when an IPO comes to market, if it's a really, really good IPO, the retail investors, the elite may, but the average retail investor doesn't really get much stock. When they're able to get much stock, it's usually not that good in IPO.
Right.
So it's something we got to be a little bit careful of.
I mean, just the number of IPOs that are coming out and kind of the craze that's been around it. We had a guest earlier this week who said, uh-oh, that makes you start to worry that all of these companies are coming out because they're worried that the doors are going to shut. And if they don't get out to market now, it's going to be a few years before that comes again. Do you worry about that?
Well, I don't worry about that. I think pragmatically, if I were coming to market, we're at all-time highs. So
right, but that's what they worry about. Like they're coming out now because they're worried that a downturn is coming.
Right, and I can appreciate that.
Yeah.
And we might very well wind up having a downturn, but we don't know that. And if just the fact that we're at highs, it would make sense to me for the people want to raise money now. But I feel pretty good in terms of where the markets are. Now, in order to buy some of those IPOs, and the individual clients across the country will do that in the secondary market, they may very well have to do some selling to be able to do some of that. Mm-hmm. But I think they're reasonably thoughtful, but more in the secondary market than the IPO market.
Where would you gauge where they are right now versus, let's say, 5 years ago versus a year ago?
A year ago, we were still on a great run. So the retail investor tends to be a little bit of a lagging indicator in terms of what's going on. Right. So when things are getting better and better, they tend to get more and more involved. But then based on last quarter, because they did get banged around pretty well, they're far more cautious now. Because that was only a few months ago. Mm-hmm. So relative to where they were very optimistic a year ago, they are optimistic but much more cautious today.
What can you tell me about millennial investors? Because I hear time and time again that they lived through the Great Recession. They don't trust the markets. They don't want to invest in as much. Is that true, or do you see millennials who are coming in at this point?
I think sometimes when we talk about that particular sector, we kind of lump everybody together.
Yeah.
And the reality is, within that sector, there are plenty of them that get involved with the markets, but right now most of them do not. I would think that changes over time. I think we see a very, very different change of behavior over the next decade with regard to that.
Just because they're getting older, they have responsibilities, they have kids.
Exactly. They're going to be more thoughtful. They're getting older, they have more responsibility. I think that would all be part of it.
What do you worry about specifically? Is there anything that kind of comes onto your radar screen that you think?
Yeah, the only thing we recognize the markets can go up and down. The thing that's always in the back of my mind, is something I've talked to my team about, is terrorism. And you can see something from a chemical perspective, a cyber perspective, a biological perspective. And I worry a little bit about that. Are we really as prepared as we should be? And I know our country is. But in the back of my mind, that something like that can happen at any time. And that's the only thing that I really, really worry about. Everything else are going to be ups and downs in the market, and they're going to happen, and we've seen them before.